Welcome to Video 1, the Introduction to Financial Accounting. Let's take a look at our roadmap. We're here at the first video of our video series. And it's the first of 3 videos that are just introducing the output of financial accounting. I'm introducing you to the purpose of financial accounting in this video, and in the next 2 videos we'll go through the main financial statements, balance sheet, and income statement. And then we'll do the accounting crash course after that. First, we're going to talk about the introduction to financial accounting, and in order to facilitate our discussion in this video, I'm going to use an example company. That example company is a electric car company that just recently became a public company. So their financial statements are available for us to look at. It's a company called Rivian. Maybe you've seen these cars before. I think this is if you're seeing it on the screen, a very handsome car. This is probably the Rivian I would buy if I could afford it. It's pretty expensive. I think it's really cool. I think it maybe is a little too cool, though. So we'll use Rivian as our example company. Now, first I'm going to start with the purpose of financial accounting, and this is my definition, okay? You'll see a lot of these terms carried forward in textbooks, but this is the definition I like to use for financial accounting. That is tracking the financial position and operating performance of a company. And I've bolded those 2 terms. Those are 2 different dimensions of performance that you're interested in understanding about a company. Now let me convert these 2 bolded terms into more common terms. So I will convert financial position into net worth and operating performance into earnings, or maybe you would prefer the term profit. Now these 2 terms are for sure correlated with each other. A company or a person with high net worth is expected to have high earnings. But we can also think about examples where they are different dimensions. So let's think about that. So I've added someone to the screen here, and that's you doing a thought exercise. And what I want to do on this slide is come up with the notion that these are 2 different dimensions. So let's think of people now. Before we think of companies, let's think of people. Can you think of a person who has high net worth but low earnings? Now, my idea for someone like this would be someone with a trust fund, but no job. So their parents are very wealthy and they've given them a lot of money, so they have a high net worth, but they're not working, and so they're not bringing in any income. So this would be an example of someone with high net worth and low earnings. Now, can you think of someone with high earnings and low net worth? My example for this would be a doctor just out of medical school. They just finished medical school, so maybe they don't have much money. They've probably got quite a lot of debt, but now they're a doctor, so they're actually earning a pretty high salary. What is the point of this slide? Is to show you that these are 2 different dimensions we might be interested in, whether we are learning about a person's financial condition or a company's financial condition. There's 2 dimensions. These are 2 main dimensions that we might be interested in. Now, I want to talk about measuring the performance and operating financial position and operating performance of a company. And first I want to set up an example of accounting that's pretty simple called the cash basis. The cash basis of accounting, you don't need a financial accounting course to be able to do this. It's a very simple basis of accounting. It's only interested in how much cash the company has. For example, let's talk about Rivian. If I went to December 31st, 2022 and asked Rivian Automotive for their bank statement, they might hand this to me, and it would say they've got cash of $11,568,000,000 in the bank. That would be a measure of Rivian's financial position. And maybe you even yourself think of financial position as how much cash do I have? So Rivian is giving you their bank statement, and that's their financial position as of December 31st, 2022. If you wanted a measure of operating performance, you could get the following year's bank statement, December 31st, 2023. On there, you would find a cash balance of $7,857,000,000, and that would be the financial position as of December 31st, 2023. You could even calculate their operating performance, which would be the change in the cash balance. In this case, the cash balance decreased by $3,711,000,000 from one year to the next. So cash is one way we can measure and explain the financial position and operating performance of a company. But what I will try to convince you in a future slide is that this is not sufficient, and you can actually learn a lot richer detail if you're willing to track more than just the cash balance. In fact, in 1494, this guy, whose name is Lucca, is said to be one of the inventors of modern accounting. And his main innovation was to say, well, we should really be keeping track of more than just cash. I'm sure when you think of your own net worth and earnings, you're tracking more than just cash, aren't you? You're not just thinking your cash balance is your net worth. You also might own a car, a house, and things in the house. You might have debt like student loans or home loans or a mortgage. And so net worth is a much more nuanced definition than just how much cash do you have. And the same is true with companies. And so here is an example of Rivian Automotive's financial statements. And what I want to show you here is they're tracking more than just cash. This is called Rivian's balance sheet. And this tracks the financial position of Rivian at any given point in time. And on this balance sheet, you can actually see that they're showing you their financial position as of 2 points in time, December 31st, 2022 and December 31st, 2023. Now, in the assets section of this balance sheet, you can see they are giving you information about their cash balance, but they're also telling you about other assets that they have, okay, non-cash assets. They are keeping track of more than just cash. They also have a section called liabilities and shareholders' equity. Let me define all of these categories for you now, and we'll go into them in more detail in a future video. First, what qualifies as an asset that Rivian would put on their balance sheet? An asset is right here, an owned resource with economic value. Now, liabilities are the opposite of assets. Liabilities are obligations to outlay resources with economic value. And so sometimes you might think of liabilities as claims on the company's assets. The company has assets, but the company also has external parties who have claims on those assets. And you need to take assets minus liabilities to get the company's accounting net worth. And that's what we call equity in financial accounting, accounting net worth. And there's a simple relationship here, which is that assets equals liabilities plus equity. You know, you could use algebra if you wanted to and rearrange this to say assets minus liabilities equals equity. And that's what the balance sheet shows you for a company. It shows you the company's financial position at any given point in time based on its accounting net worth. And we're going to learn more about specific asset and liability accounts that companies are keeping track of. The next financial statement is Rivian's income statement, which shows you their operating performance. And rather than showing operating performance at a single point in time, it makes more sense to show you operating performance over a period of time. And so you will see that Rivian is presenting operating performance for annual periods, for the years ended, December 31st, 2023, 2022, and 2021, so you can observe trends in their operating performance. Now, what is part of your operating performance? First, let's think of ourselves. In terms of my operating performance, I currently have a job, and so I get income from my job. I also have living expenses, and so I pay those living expenses. So when I think of my own operating performance, I count income from my job as wages, and I count living expenses as expenses. The same is true for all companies, including Rivian. So on Rivian's income statement, you will see income reported, how much revenues did the company earn during the period of time presented, and expenses, how many costs did the company incur over this period of time. And I'm highlighting these words, earned and incurred, because I don't mean, by revenues earned, I don't mean how much cash did Rivian receive. I mean how much revenue did they earn, whether or not the cash was received, okay? So this is a non-cash concept. Certainly they can earn revenues by collecting cash, but you can also earn revenues prior to receiving cash or after you've already received cash. So the concept represented on the income statement is how much income did you earn and how many expenses did you incur. When you take income minus expenses, you get an accounting term we call net income, or maybe you've heard it called earnings or profit. And net income is the increase in the company's net worth due to its operations during the year. So because net income increases our net worth, I have written here that net income will increase equity on the balance sheet. And so the income statement and balance sheet are connected, which we'll see in more detail later. When you have income, that increases your net worth, and so it increases equity on the balance sheet. So when you learn to read the balance sheet and the income statement, the picture for Rivian becomes more complex than just the cash in their bank account. For example, we can learn that financial institutions, everyday investors, and even companies like Amazon invest their money into Rivian, okay? They're interested in either being a creditor or an owner of the company Rivian. Rivian takes that cash and they invest in office space. They construct factories so they can produce inventory. They keep that inventory in lots available to be sold. And they also take customer deposits, so customers will prepay for some of Rivian's inventory, and they have to keep track of that obligation to deliver inventory to customers. They also have corporate customers like Amazon, and they deliver these Amazon delivery vans. They're the ones who manufacture them for Amazon, so you become aware of the fact that they have corporate customers. In terms of their operations, you learn that they sell these cars to consumers. They also sell these cars to other corporations. And actually, just that core business is currently operating at a loss. That's something you can understand from their income statement. That core operation is operating at a loss at the moment. But even over and above that loss, guess what? They continue to spend on more research and development activities, making their vehicles better. They continue to spend on the wage of their employees, including their CEO, whose name is RJ here. They also continue to spend on interest because they're borrowing money from a bank, so they have to pay interest to the bank on top of the losses that they're experiencing from these other activities. The good news for Rivian, though, which we can learn from their income statement, is that since they're operating at a loss, they don't have to pay tax to the government. So that's something else we can learn about Rivian. So you can see the picture becomes more complex. So in just review of this video, we learned about the balance sheet and the income statement. We learned the balance sheet equation, which is that our assets are equal to our liabilities plus our equity. And we can rearrange that to make it more intuitive, which is if you take our assets and subtract our liabilities, what you have left is our accounting net worth, or our equity. We also learned to track operating performance. We use the income statement, which presents the income and expenses of a company over a period of time. When you take income minus expenses, you get net income. And don't forget, net income will increase the accounting net worth of the company. So the income statement and balance sheet are connected. In our next video, I'm going to introduce you in more detail to the balance sheet.